Hey guys, welcome back to the channel. Welcome back to another video. First time stopping by the channel, hit that subscribe button. Trust me, you don't regret it. You're a returning subscriber. Again, I welcome you back. Guys, I want to talk a little bit today about what's being said about the market. And, you know, we got a lot of Fed speak. You know, a lot of people in the Federal Reserve are making comments. The market's reacting off of it. Guys, I'm going to be dead honest with you. Listen. The way I react to that is, so what? CPI numbers come out Thursday. You know, to tell a story of whether Federal Chair Powell is going to raise the rates. Is he going to raise it a full point? 75 points? You know, 0.75 points? Half a percentage or a quarter percentage? Nobody knows. But they will continue to raise rates. Because a while ago, a couple months ago, after he talked at one of the CPI reports at one of the meetings, he said, look, we'll overshoot with raising the rates if we have to. He's more comfortable with doing that, to where he feels comfortable where inflation is falling. Now, my thing is this. All this talk, the way I react to it is, so what? Because, I mean, I'm beat with it right now. The market is slow, even though we had our third day of rallying into the green, even though the market teetered. And this is expected. It's going to be a lot of this up and down. These little mini takeoffs, followed by progressive red days. But my thing is this. I spoke about between January and April, we're going to really see the effect of all these rate hikes. Earnings recession, meaning earnings calls are not going to be good. A lot of companies are laying people off. We're seeing that day by day. A lot of companies are laying people off. A lot of companies are going under. Bed Bath & Beyond, for example. And it probably might be more companies that are teetering on the debt level that, you know, fall by the wayside. Some of these EV companies may be in trouble. You know, I don't know. Nobody knows. But the thing is this. You'll watch TV and you got to remember, CNBC and Bloomberg and stuff like that, yeah, they give good information if you know how to pick through the trash, but it's still a lot of fear and anxiety being driven through people talking on television. Remember, it's a television show. They cover the market. They're going to have a bunch of different people on there with their perspective, what they believe. Nobody knows for sure what the market is. Thus, you have some people speaking from a fearful standpoint, bearish. Some people speaking from an anxiety standpoint, bullish. It's always going to be like that. Your investment is your investment. First thing is this. The reason why I say I don't care about none of this stuff right now and why it doesn't matter. I mean, it's good if you're really into that, but most investors, guys, you're not even into that, you know. I just started getting into it, you know, with the interest rates and all of that stuff and understanding how that works. And it's a good thing to know. But you know, with a lot of people not being in that and only caring about their portfolios and stuff like that, this is the bottom line. The Fed is going to continue raising rates. People are going to be losing jobs. They're trying to slow spending. They're trying to deter people from spending by raising the interest rates, thus making it more expensive to buy stuff like food and other things. And that's the reality. They're trying to stop people from borrowing money. You know, with the high interest rates, people are less inclined to borrow money. They're trying to slow hiring. You know, people are getting laid off. Things like that. And they said, hey, you know, we apologize, but this has to be done for us to get back to a normal functioning economy. We want to get the inflation rate down to 2%. By any means necessary, we are going to do that. This is from them, not verbatim, but they're telling you in so many words, we will do what we have to do, and a lot of people will be sacrificed until we get to where we're going to get. Now remember, last year, we was in the 8-point-something%. We're in 7% now with all the rate hikes that they've done. So whether they raise it a half a point or a full point, they will be making rate hikes. And they said they will be extended into 2023. So we're not stopping at this one. You're hearing a lot of news now where people are saying, oh, we might have a slowdown. Oh, it might be a thing where things turn around. Stop it. Stop it. If it did, it would be very temporary. And a lot of people would jump into the market on a lot of these overpriced stocks and get smoked on their cost basis when this thing falls through. And am I trying to spread fear and anxiety? No, I'm just trying to be real with you. You know, this is a perfect time to start investing and learning about how the market works. You got money to spread to the side. You can learn about P ratios, earnings per share, all that stuff. 10 definitions, you know, in the market, or like how to read, you know, what a stock is and all this, just general information. We got time right now because the market is slow. It's slow. This is an excellent time to jump in and start an account, a trading account, whether it's on Robinhood. Now, I'm not sponsored by any of these, or, you know, whether it's on your mobile app, but this is the time to take, it's 2023, early 2023. This is the time to take control of your financial future. You know what I mean? Everybody has New Year's resolutions. This is the time to get your spending habits in order. Pay off a lot of your debt. Manage your money the right way. You know, I was in the hospital today, and where I was working, a particular area I was working, it was a surgical center, and a lot of people were coming in to, you know, have surgery that day. Early in the morning, it's like 5 in the morning, I'm in there working. People are coming in there, and I'm right next to the desk. Man, they were calling out the amount of money these people had to pay before they got surgery, and most of them had insurance. They was whipping out numbers like, yeah, it'd be $1,000 today, out of pocket. $3,300 out of pocket. One gentleman, they told him, oh, you got to pay $7,800 out of pocket for surgery. Guys, listen, man. We got to have money on demand. You got to take control of your finances, for real. And I'm so glad that it hit me at the right time, and I was blessed by having good people around me that got through here and showed me the severity of it. Like, here I am, 49 years old, you know, and I have my finances in order, and I feel good about that. I could never imagine needing a life-threatening surgery or some type of surgery that will keep me up and moving about. That's a necessity that I have to get, and I don't have the money to pay it. The day I go there and they say, oh, we have payment options, what you think the interest going to be on them payments? It don't pay being poor. And another thing about capitalism, a lot of people don't understand, for there to be rich folks, there will be poor folks. So you got to pick which side you're going to be on. And a lot of that comes with mindset. A lot of people don't have, because their mindset doesn't dictate. It's too thick to where they can't even get the simplest instructions or the easiest things to do that turnaround, or the discipline to do it. You know, the Fed is not going to stop, and the Fed is not the enemy. They're made to equalize everything and make sure everything runs smoothly to keep America on top. No matter what is said, inflation has to fall to 2%. That means more rate hikes, earnings recessions, bad earnings, people without jobs, which is unfortunate, and rate hikes until this thing starts falling. And when it does start falling, they still not convinced. It has to fall to 2%. They said it themselves. Hey, listen, we're not done until this thing get back to where it's supposed to be. Another thing is, a lot of people understand, you got to take these people take this job seriously, because if you mess up inflation and you mess up the money, and you mess up the economy, so goes America. So this is a big thing. So regardless of what you sit hearing and seeing about, oh, the stock is going up and going down, it means nothing. People are getting laid off. They making it hard to borrow money. They putting pressure on companies. We can't have a bull run with all of this happening. Companies are not going to, you understand what I'm saying? So much stress is on the companies to lower their costs because they're harder to operate. We can't have a bull run during this time, people. This thing has to fall down. And we got a lot of time. I don't know how long it's going to be going into 2024, I predict, but the inflation number don't just fall like that. So yeah, we're going to have CPI numbers on Thursday. And I think they'll be showing that then, you know, everything is going down. Inflation and stuff is going down. The economy is getting back. But it's a slow process. The bull run is a ways off. It cannot start with companies under stress to let people go, to not borrow money. The price of borrowing money is super expensive right now. We won't have a bull run while this is going on, guys. Never in the history of anything, with the way inflation stuff, it's not going to happen. It's made like this to make the inflation fall. While the inflation is falling and stuff like that, we're going to get a lot of crazy reports. These stocks are not going to take off. The PE ratios have to come down on a lot of these corporations. That's why I'm telling you to be ready and have your money, because, you know, have your watch list of the stocks you want and all of that. Have it there, because when it's time to buy, stockpile your cash. Start stockpiling cash. Remember, pay yourself first. I don't care if it's 5-10% of your paycheck. Put it to your side in your investment account, and then when it's time to strike on your favorite stock, you strike on it. Don't fall for the fear and anxiety. You know, luckily with me, I bought Tesla the other day. You know, it's up. It went down today a little bit. I'm not concerned with that. I just wanted to get my cost basis down some. So when I do have a bull run, my return is that much greater, you know. But guys, it's going to be deals falling in your lap. I say this all the time, and I cannot say it enough. You know, the chit chat, pick through the trash of what's said, and get what you get out of it, and then make your sound decisions off of that. You remember, you're buying companies. You're not just buying a name, you know. Everybody that watches my channel, I want to see you at the finish line when this bull run take off. I want to see you at the start line. You know, when I say start line, have your investment account ready. I don't care if you got $100 in there. And as this thing takes off, we'll grow together. I'm Stock Market Steve. Appreciate you spending the time with me today. I just figured I'd talk about that. I get tired of, you know, a lot of people are making videos about the Fed and stuff, and like a lot of people like keeping up with it, but a lot of times it's redundant. It's like the same video over and over again. You know, every time the Fed says something, it's a video. I mean, I understand people want to get views. I can't run my channel like that. And kudos to them guys that can do that. Me, it's too much. I just want to get this out and be honest, man. Listen, ain't nothing changed until this inflation thing starts coming down, you know, moderately. But I'm telling you, between now, January, and April, you watch the market, you watch these earnings calls, watch what they do, and you especially watch these PE ratios, because they're going to be coming down in these stocks. But as always, guys, like, comment, share, and subscribe, and I'll see you in the next video. Take care.